We finally have Anne-Marie with us, the author of the trading book. Anne-Marie, how are you today?
I'm doing well. I'm really stuffed, very full. But
you
good
already
to have
had
dinner.
Good.
Yes, because I am in London. Thanks for those of us that are watching. We really want to break things down. I absolutely love this opening range trade that John takes, and it happens in fast markets in such quick time. I thought it would be great if we could restructure it so you could take it and build it as a tool that you could sharpen on your own when you're trading. I remember one of the last questions that got asked was, what do you think about people inventing things on their own rather than following someone else's trades? And so, although trading is a very individualized sport, and I call it a sport because I do feel it is very much a competitive, performance-based event. I want to microwave food, and I don't want to go learn how to build a microwave. I'm just going to use somebody else's microwave.
There you go.
Do you know what I mean? Yeah. So I would much rather take someone who's been trading well, like so many of you guys on Topstep, and watch what your structure is and take it back and say, I wonder how I can tweak that to make it mine. Because the smallest tweaks will make it yours.
Mm-hmm. Yeah, 100%. Yeah, I mean, that's kind of what we're saying is you don't want to go, 100% what somebody else is doing. Learn from them, make it yours, and you can keep catching fish.
Exactly. And you don't want to do something that those of us that have been trading for a really long time go, yeah, that doesn't work. You don't want to do that. And so that's really one of the most important things.
Sure. All right. So we're going to break down the opening range trade.
Yeah. So for the first part, I want us to think about this, and we'll be putting it in the Topstep Discord as a card so that you can look at it and go, okay, step 1, step 2, step 3, step 4. And that's really going to be all you're going to focus on. And so the first thing is really the setup. And so we know what that is beforehand. What we know is that we are going to watch the markets for 1 minute, and then we're going to see whether price action breaks the range that has been created within that 1 minute.
Correct.
So we'll call that the range break in terms of what happens that creates the trigger. But the setup is going to be, I'm going to look at the first minute, I'm going to measure that risk, and then I'm going to take the trade if it breaks to the north with a long, or I'm going to take the trade if it breaks to the south with a short. And my stop will be the length of the range. And so in its most simple setup space, that's what you're looking for. Now, here's what I noticed, because I don't coach anymore, but when I used to coach a lot, what I notice is that traders don't mentally prepare for the event that's coming. They just wait for it to come and go, oh, what am I supposed to do now? And that's really not what you want to do, right? So if you know you're prepared to take that opening range trade, your brain should be hyper-focused minimum 5 minutes before the open.
Right.
You want to be noticing trend. You want to be noticing how the markets are generally behaving. If they've been sideways in the pre-market, if they've been trending in the pre-market, whatever the case is. Because remember, markets are only in 2 states. They're in a range-bound state, or they're in a trending state. And that's it.
Yep.
Nothing else. And so when we look for that range break tomorrow morning, I am going to be staring down the chat. And when it gets to be time that it's starting, you know, hey, listen, range break, this range break trade, opening range trade is setting up. What is it? And can I take it? And so a wonderful way to see how it works mechanically is to use a micro. Use
Sure.
a couple of micros. And so when you get in that space, you're going to be able to go, all right, I'm not losing my shirt. I can see what's happening with price. And then as the whole team is talking about what's happening, your brain is still focused in the space of, okay, I'm hearing what they're saying. I'm watching what they're saying. I'm listening for tilt, and I'm trying to see if I'm in the right direction. And if it comes down into that threshold where you go, I got to get out, then you just get out. You know, it's like what Deanna was saying this morning. I love what she said, how she Bart Simpson. She said, I Bart Simpson myself. I will not move my opening
Yeah,
stuff.
that's right.
And so I love that. So much about her resonates with me. But that is really, you know, what you have to do as a trader is stop breaking your rules. Because you think, oh, you know, this time it might. You know what? When you're an accomplished trader, you can break all the rules you want because you know the rule that you're going to break that's going to send you rails. And that's the trade that you will not get yourself to. If you're a good, accomplished trader.
Mm-hmm.
People give Michael a hard time in the morning, but he's like a swimmer that comes to the pool and just sticks his foot in the water and goes, all right, what kind of temperature am I going to hit today? It's not I've noticed that about him. He gets in to just feel it. And
Very
if that
fluid.
has a small pullback against him, then he reassesses and reevaluates.
Right.
Sometimes it takes him a few steps to do that, but that's his game. His game is, I'm testing the pool. I want to see how price is flowing.
Right.
I want to see how it feels. And for some of us, although we might use the same types of rules Michael is using, we're not going to execute in the same way, which brings us back to the very same thing that you said just a minute ago, which was, listen, I could give every single one of you a trading strategy. You could all go do it again. And guess what? Everybody's going to have a different P&L. Everybody's going to have a different execution spot because the nature of who you are as an individual is always going to affect how you trade whatever strategy that you're using.
100%.
So I would say, hey, listen, don't go out and reinvent the wheel, right? Don't go build a microwave oven because you want warm food. Just take what works and then feel it out, and don't have so much size on so that your brain is in lockdown. So what I'd love to do is maybe go to this morning's chart where you did take the opening range break. And if you could do it with candlesticks, and we could look at that and just frame it out like we were moving, you know, real time.
Okay. So on a 1 minute candlestick chart, right?
Yeah, that, I mean, because that's what we're looking for, right?
Right.
Yes.
Okay. So first, and you know, important is to why we would take the opening range trade this morning to begin with is the overall picture of the market, as everybody knows, has been to the upside. We've got 7 straight weeks of upside activity. So in the S&Ps, the market opened with a gap. Okay. A small gap, but still with a gap. So the market opened outside of Friday's range. Okay. So we're opening out of balance. The first trade, the first minute of trade was basically from 47.80 quarter to 47.83, 2 3/4 of a point. We're talking 7-11 ticks. Okay. So the opening range is 11 ticks. Now with TopstepTV and everything, Normally, when that first minute is done, I'll put an order to get short one tick below the low of the opening range and get long one tick above the high of the opening range. I missed it. I put in the stop to get short, and by the time I got to put the top in to get long, it had already extended above. So I chased it just a little bit. I didn't get the best trade location for this opportunity. But as long as the opening range remains the low of the session, the trade is still valid.
Okay. All right.
And Marie, the next thing I would do would be to move my stop to get short one tick below the opening range, 5 to 7 ticks lower outside the opening range.
Okay. For the squishy.
Yes, because sometimes if a lot of folks are taking the opening range, the algos know it. They know the stop is one tick below the low of the opening range. Sometimes they'll go take it out, and then the opening range will play out.
Gotcha. Okay, so let me ask this question. In this range break trade, do we ever notice, I guess sometimes if you take the trade, it can just, if it breaks the range, it can just keep running and you have to chase it, right? If you want to take that.
If you're going to take it, yes.
Is that, so here are the things you said at the very beginning. You said, observe the trend, and we gapped. And so that means we're out of balance or finding new value.
Yes.
Correct?
Yes. Yes.
Right?
Correct. Yep.
Okay. So we established the range, 2 3/4 points.
Right.
But here's something very interesting that Hogue told us when he first started talking. He did not say, okay, here's the setup. Specifically, he said, let's look at the weather. What's the weather look like? Is it, and by that, what does the market look like? Hey, listen, we've been buying dips. So he observes trend almost as an ancillary. It's telling him, hey, trend is up. Markets are in dip buying phase. So my range break is likely to be upside. So could we then say, if my trend is up and I break the range to the downside, that I should be cautious with size of my risk? Or should we make that something where we go, nope, you know what? It is what it is. It's clean enough. And if it breaks the range, you take it because you're just going to stair step down into the next value area or the next congestion zone.
Right. In today's situation, I would have been fine taking the opening range trade in either direction, because if we did break to the downside, there was a pretty good chance we were going to close the gap. And then closing the gap, maybe finding reacceptance inside Friday's range and even value could have brought price lower.
And we do know that a lot of times traders will try to fill that gap.
Yes.
So that's the space where we go, all right, so in a gapping situation, we also have that space where we can go in either direction because we anticipate that gap fill is the likely target. Yep.
Yes, it certainly can be. Yep.
Okay. Awesome.
No, this is with an open outside of the previous day's range.
Right. Yes. So it has a gap, whether higher or lower.
Right.
That's what we're looking at. Okay. So we established the risk. We looked at the setup, the range break. Do you take it on the first candle that begins to break out of the range, or do you wait for a 1 minute candle to complete out of the range?
You would wait for the 1 minute candle to finish, and then you put in your stop to get long and your stop to get short.
Oh, no. I mean, once the new 1 minute candle starts, let's say the new 1 minute candle is out of the range.
Yes.
Do we take it as soon as it breaks the high?
Yes.
One tick
I mean,
over, is that what you're saying?
yeah, that's what I
Okay.
did because because the second minute started at the very high of the first minute's range.
Gotcha.
That's how I missed it.
Okay. So sometimes it just falls back into that opening, that 1 minute open, and it just
Yes.
never.
Yes.
Yeah. Okay. Oh, all right.
Yeah, you can see
All right. And then immediately, go ahead.
here's the close of the first minute, and the
Mhm.
open of the second minute was right at the very high of the first minute. So if I didn't have my stop in before the end of the first minute, I probably would have gotten slipped the way I did.
Gotcha. Okay. Okay. All right. Okay. So now that we are in that trade, um, how do we ever move our stop?
Initially, like I said, I'll move the stop maybe 6 to 8 ticks, maybe the other side of the opening range, which increases the risk. But I don't want to
Right.
get caught in all the
Gotcha. You
stops
don't want
just
to get
below.
stopped out. Exactly.
Right. Right.
Exactly. So that would be the first place that moves. And then
Correct.
in terms of continuation, what do you look at to stay in the trade?
That the opening range remains the low of the session. Now, if I were to, let's say still be in that trade, trying to figure where I would put the if I were to protect profit in it,
Mm-hmm.
right? So, they came back to the opening range. We caught this move to the upside, came back to the opening range. Actually, I think this is the one that Andre and I caught. So we caught it to kind of the high of value for the session so far.
Mm-hmm.
But if we were still in it, I mean, the only place to really put the stop is back in the opening range.
Right.
Now if we were to maintain price up here, my stop would probably be somewhere below this low here, around 790. But I'm so bad at trailing stops. I always like
Yeah,
try
I
and
hate
protect
them.
too much of the profit, and I
Yeah.
usually end up getting stopped out. But looking in hindsight, I mean, this looks like a logical place. It was last week's high, set 47.91.75. Market came up, tested it a couple of times, but never really kind of came back down below it after this area of balance here. Broke out to the upside, so the stop would be down below that, maybe.
Yeah. So
I'm
let's
not
talk
used to looking
about,
at 1 minute charts.
yeah, let's talk a little bit about size of a
Mhm.
position
Mhm.
and what is the thought about a 2 lot or a 3 lot on the break and then sort of capturing profit on the way up?
Mhm.
Or what would you tell a trader that was looking at something that said, all right, I know we're grinding up, right? I opened the day with trend.
Right.
I'm not filling the gap. My opening range has stayed as the low of the session.
Mhm.
So this tells me I'm going to have continuation,
Right.
right? So
Yeah,
we
possibly.
again,
Yep. Yep.
what possibly, right? So continuation becomes more likely if I hold the low of the opening range.
Right.
If it's a gap that's in the direction of trend, would we say
Right.
that?
Right.
Okay, a gap in the direction of trend.
Mhm.
And as we move up, let's talk about position sizing there.
Okay, so position sizing for the opening range trade, I think would directly relate to the size of the opening range. If you're looking at a
Oh,
three
risk.
point opening range,
Yeah.
right?
Okay.
So your risk is going to be considerably smaller, maybe 5 points of risk. So, that's $250 per contract. If you're willing to risk $1,000 for the opportunity to participate in this, you could take 4 contracts. But I'm always cautious about doing that because, myself included, I have a tendency to start taking profits less than 1-to-1. I would prefer to take my first profit at 2-to-1 if it's available to do that. But do I get it? Once in a blue moon, will I be patient enough and hold on long enough to get it? And then you can let the other 2 kind of play out.
Okay. All right. If we have markets that are a little bit messy in the morning, where they break, we've got the range break, and then for several minutes we sort of go out of the range, but then we'll come back and test the top of the range. Do you ever add to your position when it tests the top of the range? If trend, what makes you go, you know what, I'm going to add at that pullback?
Well,
like let's take a look at where you and Andre got in this morning, and that opening range trade. Notice it came back just a wee bit, right?
Yes.
It came back to test that range. So
twice.
Yeah. So my thought, because I'm a VWAPer, and I look at my moving averages, I would say, wait a second, I'm going to add there, or I'm going to add back if I decided to take it out as it began to arch over, because I said, you know what, I'm going to take a little size, and then as soon as it stops moving, I'm going to get out, and then so on and so forth. So if you're looking at, hey, let me buy the pullback out of that range, what makes you look at it and say there's a higher level of certainty that it'll hold that top of that range again?
Because it did before, right?
Yeah, exactly.
Right. In my experience, adding to trades that are already, in my direction, also something I've always had a difficult time with.
Yeah.
I'm more of an all in, all out kind of a guy.
Yeah.
And I mean, really, the goal of the opening range trade is to catch the beginning of a daytime frame upside auction or downside auction that may go all day. Now, to be able to sit with, a number of contracts on while price goes your way and comes back against you, and goes your way and then comes all the way back to the opening range right here. Right here. It comes all the way back to it. And then, to sit there with this much profit, have it come all the way back to the opening range, and then to have it continue, it's something I'm constantly trying to work on doing that. I'll tell myself, if I take the opening range today, just don't manage the trade. If it hits the full stop out against me, so be it. But I'm rarely able to do so.
Segue. What do we have on the tilt? What is the tilt showing right now for the ES?
Short 44%, long 36. Short 40.
All right.
64%.
So it's been trying to buy that edge for a bit of the afternoon. So if it breaks there, we'll have something interesting. I've been looking for a short in the NQ because it feels like it's getting a little slushy, but every time it pulls back, it buys again. So this is another buy zone, I suspect. But we can keep our eyes open just a little bit as it pulls down into the space. Okay, so we have the setup, the risk, the trigger. We've assessed overall trend. What else would we talked about size.
Right. Yeah.
So,
So the risk is largely established just by the size of the opening range itself, that first minute. So it's rather mechanical. I mean, in that regard.
Yes. And that's really what I want us to, this is why I wanted us to talk about this the first time, because it is really a very mechanical trade.
Mm-hmm.
It's a very mechanical trade. And what we have to get accustomed to are risk and uncertainty. And so risk is quantifiable, but uncertainty is not.
Is not, right.
We have uncertainties, anything can happen. That's your ACH, right?
Right. Yeah.
So when we get comfortable, we are able to become comfortable with uncertainty if we manage our risk very carefully. And I think that's the big takeaway from putting this card up. And I would love for folks to say, hey, you know what? I'm going to do this 1, 2, 3, 4 approach, and I'm going to try it over and over again, because what I have noticed over time is that, one, this is very interesting, traders, young traders who are watching seasoned traders will think to themselves, oh, if I do this, then I do this. And older traders, in talking to younger traders, know definitively that anything can happen. And so you can't say, if I do this, then I'll do this. And so what we end up doing is building all these sort of ancillary little pieces of whatever that makes the trade much more complicated, when really we want to focus on the task at hand. So let's say, first off, tomorrow morning we get up and the opening range is 10 points wide, so 40 ticks. Let's just say it's insane. It just gaps up monstrously.
Right.
At that point, we can say, you know what? Out of my risk range, I'm not taking the opening range.
Right. Right.
And then you put it to the side and go, okay, I've made my decision there. Maybe there's a trade that comes back and takes me right back to the open, and then I can start looking at it again.
Right.
But as far as the opening range trade goes, the risk is too wide, and so I'm not going to take the range break. And the takeaway there is to empower the trader who's staring at these, I want to take John's trade. He takes it all the time, and it's his sweet spot. How can I do that? And then just realize there's a space where you go, I can't take that trade. It's outside of my risk bound.
100%. Right? Yeah. You got to stay within your risk appetite, right? So if the opening range trade is too large, if you're usually trading 4 contracts, maybe you can trade 1 or 2 to reduce the overall risk of the trade. But, if the risk is too large for even 1 contract, then you don't take the trade. You can't, because you can't afford the risk. And
be comfortable with that as a trader, because like I say, the market's a buffet, and something that you love to eat is going to show up on there. It absolutely is. But do we have any questions that are brewing, or is everybody sort of zoning out or zoning in?
There was somebody that earlier I kind of glanced at the chat, and there was somebody that mentioned, I don't remember exactly who it was, and I apologize, but he said he's been taking the opening range trade daily and believes that by just taking the opening range trade, you can complete a trading combine within a couple of weeks.
Love it.
Okay. So let's take a look at some history. Okay. This is the March market profiles from T4. Some of you are used to seeing them on the screen here, but here, this gold bar right here represents the opening range. It's the dead low of the session. if we were to say to ourselves, well, we got a gap, we were unable to close it. It's only a 2-tick gap, by the way. We were unable to close it. And we're going to just buy the opening range. We're going to risk the 5 points, and we're going to get out on the close. Right now, we're looking at, well, if we caught the opening range right at 70, 83 quarter, we're looking at 12 points of profit as we sit right now.
Yeah, that's fantastic.
Okay. So the next opening range trade, and Anne Marie, I mentioned to you, it's sometimes a little bit cyclical. More people taking it make it less probable. So here's the next opening range trade that happened right here. Big opening range. If you didn't take it, do you get another opportunity that day, which is something, Anne Marie, you were just talking about.
Yeah.
If I split this profile, these are 30-minute ranges, each letter, right? Well, we did get another opportunity. In F period, price came back inside the opening range, offered us an opportunity for even lower risk than taking the opening range on that first break of the first minute. We got another opportunity later on in the session to limit our risk. And by the end of the session, this market had put in a new high. Okay.
Well, that's great.
Now we can look at a couple of, oops, hang on, I took off the volume profile. We can look at a couple of different situations here. This was, I'm bummed that we don't have the March contract, because there were a couple of trades where I took the opening range trade. It took out the low of the opening range by 2 ticks. And because my stop was outside of that, where the stops were, I was able to stay in that trade. That was a 2-lot, so I took one off and then, made some money on the other one. But so here's another day where the opening range remained the low of the session in the end, and then we ended up closing at the other extreme. The difference is this market, this opened in range and in value. Very small opening range, though. I mean, we're talking about 675 to 5 ticks. You have to take this opening range trade just because it's so cheap.
Right. So in range and in value, do you notice that it tends to stick around or get squishy? Or
I think that because it's in range and in value, there's a tendency for the opening range trade not to be as successful.
Gotcha. But there it was.
But you have to remember, when the market is in a period of balance, eventually it uses up its ability to facilitate trade, and it's going to go looking for something else.
Yep, absolutely.
Right. Absolutely. So, we had here. This might have actually been the day in the D's contract, but the market opened, looked higher, took out those little stops right below the opening range, and then finished the day on the high.
Yeah. Okay, so let's put out a challenge to say, hey, listen, we're looking for some top steppers to go, hey, I'm going to take that opening range and I'm going to learn to work on it consistently rather than getting distracted with lots of other things. Because at the end of the day, I mean, this is tradertainment. Things are, all nice and great. And at the end of the day, we really do want to make money. So, I'd like to see, maybe we put up a poll and ask people if they take the opening range trade, or if they're willing to take the opening range trade, now that they've looked at it for so many times with you, to realize that it's such a good moneymaker. And so, everybody's eyes are totally focused and making money together.
Right. And, we're just kind of showing you a possibility. There's no guarantees of profit or loss on anything, so, but it was Carl Hungus is telling you, that was him that said that, he's back tested it and then hung his head in disbelief that he didn't do it every day. So
Yeah, so I started looking at it, and that's what made me go, wait a second, why aren't we really breaking this down as a major anchor of opening process? I mean, why aren't we doing that? This is such a great setup. It really, really is. It's fantastic.
And it's so, I've been wrestling. Maybe there's distraction, whatever it is, no excuses. I've just not been trading it well. I've been taking it just about every day. I've been profitable doing it, but I've been impatient. I haven't been holding the opening range trade the way I would say I would like to or normally would. So, I can do an experiment as well. If I take the opening range trade and it stays and it holds, maybe the next time it happens and I'm in it, we just say we're gonna hold it till the cows come home, and whatever happens happens. If it comes and takes me out, then that's fine. You got to be a good loser, right? So, maybe this is something that I can do, for everybody else, just to say, this is the opening range trade. Let's see how it ends up by the end of the day. Because there have been so many trades lately that I've said it, taking the opening range trade, and I've made some decent money on them. And I'd said, I'm just going to be happy with that. That's not the way to do it. There's a reason for this trade, and many days when it happens, it's the indication of a potential trend day to one side or the other.
For sure. It's super, super powerful. And lastly, of course, from that consistency of application, here's the thing about trading, right? There's the fun, crazy trading. Sometimes we see everybody in a flurry of activity, and we love watching them, and it's all over the place, and people are saying funny things and doing crazy things, and we're having a great time. But at the end of the day, the stuff that makes us money just is not going to be sexy. It's not.
Right.
It's going to be consistent, and it's going to be reliable. And consistency and reliability just don't fall in the sexy bucket.
That's true. True.
Right? So we can have fun, but realize the second your fingers go onto that mouse, it's game time. And I like to think about it in terms of the fact that we are professional athletes. And when we get onto the field that's trading, one, we have to imagine that it's got to count, and we have to do it to the best of our ability. But that doesn't mean, oh my gosh, I got to make something happen. That means before you enter, you go, you know what? I'm taking John's opening range trade today. And because it's the first time I'm taking it, I'm going to do it with a couple of MES or a couple of MNQ. I just want to feel the rhythm of it.
Even just doing a practice account to get used to it if you need to.
Exactly. Just do it and then watch it work. And then, if you do it in the MNQs or the MES, and then you have other trades and other strategies that you're working on, and you can do that in your ES or your NQ or whatever you do during the course of the day, just understand this is pure gold. Listen, there's a reason that John is on these shows all day long. It's because he knows what is going on. That doesn't mean that he's going to win every trade.
Right.
That doesn't mean he's going to pick every trade that's supposed to go well. It's not. It's the wealth of information that comes from him talking about this setup. And before we even talk about the setup, he goes, well, wait a second. Let's take a look at what we had the day before. What's our trend? Are we gapping up? These sorts of things that you hear in live, frantic, frenetic type of Topstep TV trading, you've got to get back and go, hang on. He's spitting out all kinds of info that I need to get stuck in the old noggin so it comes out the same way it does with him. And so this is just a great way to break that through.
Well, Anne Marie, we're going to be getting you into that crazy fray soon here, aren't we?
Yes, and I am excited about it. I really, really am. I love fast markets. I think it's really, really great. I have no idea how you guys do it all together and still end up green. I have to put the horse blinders on and say, all right, just pay attention to this. It's coming into this level. And so it's just easier for me like that. But yeah, I'm really looking forward to it. And again, I know this might have felt just a little slow for you, but the key, if you're thinking about why am I here, listen, you're going to have so much fun when you know what to do when you're making money, that everything else is going to be just icing on top of the cake. Once you start making money consistently, that's going to be the most fun that you're going to have.
Yes.
So that's really, even if you're doing it for the love of the game, or you're saying, hey, listen, I want to do X once I get this amount of cash, whatever it is, right? Get yourself to that space and don't think so much about being in the activity for its own sake. Think about what's going to happen if I do this over and over and over and over and over and over again. And the reason so many of us come for resets is because we don't think, wait, I'm doing that over and over and over and over again, and it's not giving me what I want.
Right.
So that's just that key event. So glad we got to do it. Is there anything that you want to add for that? I am going to make this card up for us nice and simple. 1, 2, 3, 4, with some elements of what we look for. I think I might try to make a couple of pictures from one of the snapshots of, because hey, I'm on Topstep X.
Right.
I got it just when did I get it? Last week, Thursday or whatever, and I traded the first day, and I'm getting a feel for it, so it's great. We'll pull it in, pass the combine, and go through all of that stuff.
Well, that's great. Do you like the platform so far?
I do. It's very clean. I just have the VWAP up, and I use a linear regression step curve that gives me overall trend relative to the framework. And yeah, it's really nice. I love having the tilt down there at the bottom. That's super nice.
Sure.
And then, yeah, what I am trying to figure out is how to make brackets. So that I'm still figuring that out.
Yeah, I think it's in the gear wheel on the dome, I think. So you can you can set your take profit and your loss.
Yeah.
And that'll put it in there for you. And then you can drag them to wherever you want them on the chart.
Okay. All right. That works.
On the chart. Yeah, it's nice.
That works.
Yeah, it's nice. So we're back here next Thursday, I believe, Anne Marie.
Yes.
Back to the futures next Thursday, 1 p.m. Central. What is the next setup we want to address?
So what I would like to look at is the ones where you talk about auction failures at poor highs or poor lows.
Okay.
Those I'd like to focus on in terms of saying, when do they show up? How do I know I've got a confirmation for things moving over? And then, we usually have a fair bit of examples for those. But I like those because My philosophy about trading is this, and you pegged me well. One morning, you were talking about how I trade, and I look for edges. And the reason I look for edges is because I'm always trying to combine the Venn diagram of risk and uncertainty. Make that little piece in the center as small as possible.
Okay.
And so by that, I will look for the places that in the recent past, the only thing they've done is buy. Whether it took them a couple of minutes or maybe an hour or whatever,
Okay.
eventually all they're doing is buying.
Right.
Or selling.
Who are they?
Who are they? Anybody that's not me.
Understood. Understood. Okay.
Yeah. So they is what I'm seeing in the market in terms of the candlesticks, right?
Right.
And so these poor lows and poor highs, I notice have a tendency for sometimes V-shaped moves. And so that makes me go, wow, I need to pay attention to them more, see how they work relative to my frame of, oh, we're trending higher, but we seem to be pulling back here several times. So I'm going to watch for that.
Excess lows.
Yes.
Excess.
Is that what we would say?
Yeah. Excess is like, a failed auction. Like, let's say the market breaks out the initial balance, but doesn't stay up there and turns around and rolls around the other side.
Yeah. So that would be the failed auction.
That would be the failed auction, or sometimes known as excess.
Okay. So a poor high would be.
And in market profile, a poor or weak high is an indication that price was willing to go there more than once. So poor highs and poor lows have a tendency to be revisited, but time is not relative to that. A poor low may be revisited in 3 weeks.
Right. Okay. All right. Well, let's dig into those and the types of we probably will only be able to do a couple of those in terms of the types of those setups. So I'll email you some questions in terms of these excess, what we call excess, and then we'll go from there. We'll just knock it out, make these cards. And I think because we have Topstep Discord that has so many additional resources to Topstep TV, and you can type in the Topstep TV Discord channel also. Mm-hmm. They sit down talking about all that stuff. It'll be a great place for you to go, oh, wait, the market is static. I'm quiet. I need to study. What am I looking at? And again, take time to study. Just like the best performers of any sport, they practice. They practice, they practice, they practice, they practice.
100%.
And so take the time to do that. And look at those cards that we'll be putting up for you. And
even professional baseball players are practicing the fundamentals.
Oh, absolutely. What was the name of the guy that threw until literally he would take the old baseballs and he would throw them until
spun the cover off?
Yes.
Right.
And he actually, until his fingers bled. He's super famous. His name is like...
I'm not sure. I'm sure Eddie would probably know. Eddie
would know. For sure.
We'll ask. Well, listen, Anne-Marie, we've got to get moving. Looking forward to seeing you back here on Thursday. Same bat time, same bat channel. We have the best people here on Topstep TV. Thank you so much, Anne-Marie.
It's my pleasure. Coach Ray is great. I love the way he broke down gold a couple days ago. It's fantastic. I'm looking forward to listening to him as well.
Yeah, great. All right. Thank you very much, folks. Stick around. Power Hours coming up. We'll see you in a few.